I'm Greg Brown for Newsmax TV Money. We're on the phone today with Jim Rogers, the well-known commodities investor who only recently correctly called the horrendous decline in financial stocks, including the Fannie and Freddie mess. Jim, it's great to talk with you.
I'm delighted to be here, Greg.
I know you have a lot on your mind, but let's hit Fannie and Freddie first. Should the Fed have stepped in, and if not, why not?
Well, if you ask me, they shouldn't have. They should have let them go bankrupt. First of all, every prospectus they put out say they're not part of the United States government. They're not guaranteed, and anybody can read a prospectus can see that the companies were over-leveraged, overextended, and in trouble. I mean, lots of people shorted these things because they could see the problems. So now you have, Greg, 300 million Americans on the hook for $5 trillion, that's trillion with a T, $5 trillion for debts that some crooks and some incompetents put together, and we're stuck with it. I mean, the entire national debt of America is $5 trillion, and in one weekend it was doubled to $10 trillion by people who were never elected to anything, to people, maybe a few thousand people, or maybe a few 10,000 people, put the rest of us 300 million deep in trouble.
Oh my. You've been short on financials for a while now. Are we headed for a wave of failures here?
Well, we've had a wave of failures, yes, and we're going to have more, I assure you. There are going to be more coming over the next few years, partly because there were huge excesses in the past 5-10 years, as you know, and now, of course, Washington is making mistake after mistake after mistake. Instead of correcting this the way I would correct it, they're making more mistakes, and I'm afraid we're going to have one of the worst decades we've had in a long time.
Wow. Let's name names. Any big banks at risk in your view? Citi, Merrill, Lehman?
Well, I'm not sure how you define at risk. I'm short all the ones you mentioned. I think they're going to go down. I wouldn't have sold them short. I've been short them for a while, though. I don't know if they're going to go bankrupt. I have no reason to think that.
Sure.
Because they're all big banks, and somebody's bound to merge with them or save them or something else. But I don't expect them to be very great stocks for some time.
I hear a lot from some of the folks on Wall Street about a market bottom forming. What's your outlook for U.S. stocks?
Well, the stock market has been pretty much beaten down here in the last little while, and that frequently leads to a rally. I'm not a very good market timer, Greg. In fact, I'm the world's worst trader, short-term trader, so asking me is a waste of time. We're overdue for a rally. We may have a rally, but I'm not buying stocks in anticipation of it because I think the stock market's going to be a bad place to be for some time.
Given that you're not that close to stocks and on purpose, as I understand it, where are you investing now?
Well, these days, I'm more or less watching. I have bought some airline stocks recently. I have bought some agricultural products recently. I have bought some Swiss francs and some Japanese yen recently, some Chinese renminbi recently. But that's about all I've done to buy in the recent past.
You're quite a critic of the Fed. Is the dollar in for more punishment, in your opinion?
Oh my, it breaks my heart. But yes, of course. I mean, the United States dollar is now a terribly flawed currency. Greg, as recently as 1987, the United States was a creditor nation internationally, and now we're the largest international debtor the world has ever seen in the whole history of the world. We owe over $13 trillion, and our foreign debts are increasing at the rate of $1 trillion every 15 months, and the Federal Reserve is out there doing its best to drive it down more. Their own official record is saying they're going to debase the U.S. dollar. That's never been good for any country in history, but our central bank is doing their best to drive the value down.
Do you agree with the view that U.S. interest rates have to go up in the short term?
Well, I don't know. When you say interest rates, whether you mean long-term or short-term, that may be a technical thing for some people, but you could, in theory, have short-term interest rates, interest rates that you borrow for your credit card, for instance, for 30 days or 90 days, go up or stay low while you have long-term interest rates go up, your mortgage rate, for instance. Because, in my view, there's more inflation coming. They are debasing the dollar, and that's going to make the long-term interest rates and medium-term interest rates go higher. The central bank might be able to control short-term interest rates for a while, but in my view, all interest rates will be going higher over the next few years because of inflation and debasing the currency and several reasons.
I understand from reading some of your writings recently you have a lot of good things to say about China, especially in the long term. How can ordinary investors get in?
Well, the things I say, the good things is you put it about China. China is a booming economy which has a great future. China has plenty of problems too, just like we did as we rose to power and glory. There are plenty of Chinese stocks which trade in the United States. It's one way you can do it. Plenty of Chinese stocks that trade on the stock exchange in Hong Kong or London or Singapore. It's easy for any American broker to buy stocks that are listed in Hong Kong. So there are ways to do it. There are mutual funds, there are indexes, there are ways one can do it. I wouldn't suggest anybody should invest in anything unless they've done a lot of homework and unless they know a whole lot about it.
Of course, of course. I understand that you've started a new commodities index recently. Could you talk about that for a moment?
Well, I started a commodities index in 1998. At first, there have been some variations on the theme since then. Basically, I think that the best place for most people to be invested over the next decade is in commodities. There'll be setbacks along the way, obviously, but for the best market that I know where things are out of balance, supply and demand, are in commodities. So I devised this commodity index so people could invest in it.
Mr. Rogers, I wanted to ask you, if I could, if there's anything else on your mind about the markets. We've been talking a lot about commodities and the financials and things that you have been doing in the markets recently, but what do you see coming up that got you thinking about the markets these days?
Well, these are perilous times in the economy, in the world economy, but largely because of mistakes that we've made in the United States, unfortunately. 10 years ago we had the Asian crisis, which affected world markets. This time I'm afraid it's going to be the American crisis, which is affecting world markets. So be very, very careful about anything you buy anywhere, certainly in the U.S., including the currency. I think everybody should learn about international diversification because I'm afraid things are going to be better outside of America than inside America. I don't particularly like saying that, but one has to accept facts and face facts if one's going to survive.
Of course, of course. We've been talking with commodities investor and author Jim Rogers from his home in Singapore. Thanks so much for your time.
Thank you, Greg.
I'm Greg Brown for Newsmax TV Money.